Hello there, traders. Welcome back to the live stream. My name is John, Senior Market Analyst at Blueberry. I'm going to take you through some of the markets today. We're going to have a look at what's been going on and potentially some opportunities, some interesting developments. Starting to see the bit of dollar strength coming back into the market. We're going to talk today about, is that dollar going to remain under pressure, or are we going to see it kind of have a little bit of a rebound? We're going to talk about that very shortly. Hello, Hami. Hope you are well. Give it a couple of minutes or so. If you are watching, give us a wave. Say hello. Hello, Ibrahim. Welcome. Hope you're doing well. Right, let's get cracking on some stuff that's happened then, and then we'll go over some other bits and bobs as well. So, let's take a look at the fun stuff. Let's change the view. There we go. So, what have we had so far? We've got a CPI data out of Canada. It's come out today. Actually, a bit better than anticipated, right? So, CPI month on month came in at 1.1%. So, that has jumped significantly higher than 0.6%. Trim CPI, which is basically core CPI, came in at 2.9%, up from 2.7% as well. So how is the Canadian dollar going to be impacted by this? CAD was one of the weaker currencies that I had mapped out on the currency strength meter, but it was in a reversal zone. So whether that has now seen a bit of strength come in, we'll have to take a look. I haven't traded any CAD pairs at the moment, so we'll see if anything has kind of changed there. Who else have we got in then? Ibrahim, need to hear your thoughts on EuroCAD. Okay, we can take a look at EuroCAD, no problem. Hi Ratish, I'm pretty good. Hope you're well. Vincent, hope you're well too, and Innocent. Good afternoon to you all. Get rid of that a second. So yeah, let me know what you guys have been up to as well. We'll take a look at what's happened to CAD in a second. Some interesting data coming up tomorrow though. Just want to kind of brief you on what's happening tomorrow. We do have the Bank of Japan interest rate decision as well. So that's something we've got to take into consideration. Likelihood is that we're going to hold at 0.5%. I think that's highly likely. We did see wages increase in Japan. We've also seen inflation move higher in Japan as well. That's why you can see I was looking at this over here, Japan's monthly wages in manufacturing. I was also just kind of taking a look at the average sort of earnings that have been going on, sort of looking at the rise in wage pressures as well. So yeah, there's been a lot to kind of talk about really in terms of what's been going on in Japan in terms of wages and whatnot. Now I know average earnings did rise to 5.6%, I think it was. So there is some potential. Let's just have a look here. That's 2.8%. I haven't put the latest figures in here. So yeah, we've seen a lot of hikes in terms of wages in Japan, and that's going to obviously have an impact on inflation going forward, because more people have more money, they're more likely to spend within the economy. If we take a look at the inflation pressures that came as well, we can see that inflation has been rising in Japan as well, right? So we were at 2.3% in October. That has been on a continual rise, and the last reading that we had was up at 4%. That's one of the highest levels since January of 2023. So very, very interesting that this market is rising here. So I think the Bank of Japan are on a path to hike interest rates. It's just whether they'll hike interest rates tomorrow. I don't think they will, but we never know. You never know what will come out of the Bank of Japan. So we shall see what happens there. So yen could be a little bit volatile. We did talk about the potential pullback on Japanese yen last week. That seems to be playing out. If you take a look at Kiwi yen anyway, that market has been rallying higher. Looking at the evening then, we've got the FOMC, or the Federal Reserve interest rate decision, expected to hold rates at 4.5%. That is highly likely as well. If you head over to the CME Fed Watch tool, you'll see that we're up at 99% chance that the Fed are going to hold interest rates tomorrow. So the bond market pricing in the fact that we're going to hold. So that's pretty much giving you everything that you need to know about what will happen tomorrow. I think we're going to see a lot of non-events really coming from these central banks this week. I mean, I don't see the Bank of Japan doing anything. I don't see the Federal Reserve doing anything. I don't see the Bank of England doing anything as well, because we're expected them to do something. The only one really, Swiss National Bank, looking to cut interest rates by 25 basis points, but that's on Thursday, and we can talk about what's happened there on Thursday as well, because we also have China's loan prime rate as well, which is basically interest rates there. So yeah, decent data out of CAD. Let's see how that has impacted the Canadian dollar. I haven't actually looked at how this has impacted the market. Dollar CAD slightly to the downside. If we look at the hourly chart here, hasn't really done too much, right? When we look at this chart here, it's just kind of gone sideways. There's been no real kind of amazing breakout from that. I know that you wanted to have a little look at Euro CAD, Ibrahim, so we'll take a little look at that. But I don't expect too much has happened. No, the market hasn't really done anything. It's just gone sideways. So yeah, nothing really to kind of shout home about there on CAD. I did like the idea of potentially selling CAD, but if we do start to see these fundamental indicators kind of drive a little bit higher, then we could possibly see some kind of, you know, turnaround for CAD, but we'll shall wait and see on that one. Hi Dungy, hope you are well. Check out the euro dollar. I said last week, yeah, euro dollar continuing to rise here. We'll talk a little bit about this in a bit more detail as well. Hello to you as well, Hawaii. I hope I'm pronouncing that right. Welcome. Hope you're doing well. Cocoa futures, please. It's almost time to buy. Yeah, we can take a look at cocoa futures. I've not traded cocoa futures in a long time, so we shall see what's going on in cocoa. Cocoa markets down quite considerably, which is good if you want to be a buyer. Let's have a little look at the CFTC reports then, if we're going to be taking a look at commodities. Let's have a little look. Where are we? Go full list. There we go, cocoa. So yeah, potentially I like that. If we take a look at what's going on from a commitment of traders point of view, hedge funds are now selling cocoa at record levels. You know, that is a good sign if you want to be a buyer of the market, you know, because they are essentially pushing prices to an extreme. And typically when we see that extreme, it can lead to potential reversals in the market. So if we have a little look at what the prices are doing, this is a weekly chart. We can see that they've now reached sort of their sort of lowest levels since 2023, 2022. So in terms of extreme, you know, we're at quite a decent extreme there, just over a year or two. So, well, 3 years if we're considering it to be November. So hedge fund contracts at the lowest levels in 3 years is quite significant. I quite like this sort of zone down here, right? You know, that kind of area where we saw a lot of bullish pressure coming from there in the past. So, you know, and remember as well, commitment of trader reports is very poor at timing things, but can be very helpful to kind of signal what's going on. Taking a look at cocoa futures there, you know, if I wanted to be a buyer, this is definitely the sort of area you want to do it at, isn't it? Down towards these kind of lows. So maybe we'll see a little bit more downside before the upside. I think one thing that you can kind of monitor is this daily chart here. You know, if we continue to see those lower lows and lower highs, then that's good. And then once that breaks, then that's kind of your idea then to try and, you know, get back onto something there as well. Seasonality is also lining up. I haven't looked at the seasonals. Let me have a quick look at the seasonals then. Should have made a coffee before I come on stream and I haven't, so I feel like I haven't brought any kind of drink with me. I'm thirsty. Right, let's have a look at cocoa then. Where are we? We are March the 18th. Oh yeah, so yeah, there's quite a significant low at that point, isn't there? Let's have a look. So yeah, the pattern I'm seeing right now is this one. Right, I need to kind of refine that a little bit, I think. So you've got kind of an initial one here where you, from sort of the 18th or 19th of March up to the 27th of March, there's an 80% win rate over the past 10 years. Only lost 2 times out of those years as well. So that's quite interesting. Drawdown on that has only been 3.58% max anyway. So let's say, here's the 19th or 20th. Depending on where prices go, I'm just going to go off what the prices are now. I mean, the max drop has been 3.3% from that point. So, I mean, that's, you know, quite a decent stop loss on that one. Let's have a look at a little bit more detail of that, because I can see that we usually top out in sort of April time as well. So maybe if we go up to April and get a little bit more information. So 70% winning trades over the past 10 years. Let's see if this gets a little bit better or worse. Let me take out, so that's COVID in there. Let's see if we can add some more data. Let's see it over a 15-year period, over a 19-year period. Let's take out COVID. So when we do that, it looks actually the best time is probably the 8th of April. Although that only has a 57% win ratio. Yeah, keep an eye on that one. I like this because it's not just a seasonal play, but it also has the commitment of trader report in there as well, especially when you look at it from a detailed report point of view. And you can see that if we just go down to go, you can see that we are at a 52-week low. Yeah, that's a significant potential. Well, it's a potential reversal signal, essentially. And just to kind of prove that as well, like, you know, last week, I had an interesting comment actually, which was like, if you are just looking at COT extremes, that is a rookie move. And I get it, because commitment of trader reports is, you know, a lagging indicator, but I think it's extremely helpful, especially when it comes to risk, because one thing we were looking at last week was the fact that New Zealand dollar had reached a significant low, and we also saw that the Japanese yen were at a significant high. So I basically said that this currency pair here, New Zealand yen, has a real good opportunity of a reversal coming up, and let's, you know, and I ended up taking a couple of trades on that. One was a loser, granted. The other one is still in and was doing okay. It's now come up into a level of resistance, but you can see that this has continued to kind of drive higher. This was my initial trade over here. Okay, I ended up trying to buy this kind of breakout on New Zealand yen. So the market had changed trend. I was trying to buy this kind of breakout of this zone. Thought I could get cheeky with my stop loss and just put it under that swing low here. Ended up, you know, the market kind of double topped, pulled back, took me out on my stop loss, but then formed the exact same situation. So I ended up getting in at a little bit of a better price, stop loss below that swing low here, and then this market has continued to trade higher. So this is why I look at extremes on hedge funds. It's not because they give these, you know, good trades and opportunities as well, but it also tells me when a trend could be potentially coming to an end, and only if it's in the near term, right? The market may drop from here, right? Because I do still believe that the Japanese yen is a strong currency and probably will be a stronger currency this year. But at the same time, the market has to reposition itself, okay? It has to try and get traders involved. And when you have two opposing commitment of trader signals, to me, that's quite a strong opportunity. We had a really good one last year, and I'm going to keep talking about it because it was such a good trade. I may not have got as much out of it as I really wanted to, but we had that back in July, right? We had pound futures or pound COT extremely bullish. We had Swiss franc extremely short. Okay, what did that create? Creates an opportunity for that to reverse, right? And that's what happened. Market tanked. So I want to try and get those opportunities whenever I can. Kiwi yen being one of those, right? Market has found a sort of double bottom down at this level here. It's now broken out of that range. It's pushing out. Yes, granted, we're at resistance now. So if we pull back a little bit, you know, I might be able to add in a second position to this because the market might want to trade higher in the short term. When we look at the weekly chart, right, it's relatively cheap. If you look at it from sort of July of 2024, it's still kind of relatively cheap. We're kind of trading within that sort of area as well. So, you know, I don't think that this market is going to be anywhere back up into like this area anytime soon. But, you know, if we break through these lows here, maybe it'll go to the next resistance level. You know, that's what I'm kind of eyeing up. Can it get to this resistance level? If it breaks this one, can it get to this one? You know, I don't know, but we shall wait and see. Good afternoon, Bongo. I got the same trades like you, lost one, closed one in profit. Yeah, nice. Yeah, I mean, look, this is what happens sometimes. You know, you try and get into a position a little bit. Well, I didn't get into it early. I think I followed my trading plan here. The only thing I would have done differently here is if I'd taken this, let's say I took this on the 4-hour break instead of the 1-hour break, right? And I took that candlestick there. I think from a 4-hour trading point of view, I would have put my stop loss below that swing low there. So that's the only difference. So I could have avoided one loss, but at the same time, you know, I got into a really decent trade here, which at the moment is running quite nicely. Just looking at sort of current, we're up 3R on that. So I've covered my previous loss, handsome, by a decent way. So I'll see how market performs here, right? You know, because I'm expecting the market to continue to trend. So if we get like a double top here and market fails to break that high there, then I'll be pushing my stop loss up towards that swing low. I'll take some off the position here. I've already took a little chunk off anyway, but I'll take some more off there. And then if it completely reverses, it completely reverses, right? There's no point holding any kind of grudges to it. So we shall see, because this is quite a significant level, right? Quite a significant level in here, right? So I quite like that that further upside then. Let's take a look at dollar yen, because obviously, you know, when we're talking about cross pairs, I like to look at the major pairs against each other. Now, New Zealand dollar has been breaking higher. We've actually broken the 58 barrier, which is something that I've been kind of looking for, but this is now actually at a crucial resistance point. I need this to close above here as well, really, and I'm going to keep that Kiwi long on, because that would be significant. I think if we broke through and closed above 58, then this market may continue to push higher, right? So the weekly 50 moving average up here could be a good target for price. But yeah, I'll wait and see on that one. Dollar yen as well has broken through trendline resistance, but at the same time, still bearish. Okay, still creating lower lows and lower highs. So I'll see, you know, if we get that kind of continuation on dollar yen. I think if we kind of trade anywhere near these previous highs and close by those previous highs, then I think that's a good sign that we're going to see a little bit of a dollar yen sort of pullback. But at the moment, the dollar is just so weak. You know, if we look at it on the dollar index, it's just very, very weak right now. And we are at a very kind of crucial point. Again, if we look at the weekly chart, just kind of rounding out the bottom here around 103.50. So if that doesn't hold and the market breaks that, then the next kind of area of interest is back down towards the 101s, which was the September lows. Again, this was where we were looking to buy dollar. So, you know, that is quite a sizable shift at the moment. So I'll see how that kind of plays out. Hi, Barry. Hope you're well. Yeah, let's take a look at nat gas. I quite like nat gas downside. I think someone pointed that out last week as well. But yeah, COT is showing continued sells. Where is nat gas? Here we go. So the commitment of traders report at the moment is more on the bearish side of things. If we actually just open up the this one, so it's actually more on the short side at the moment. When I look at the detailed view of the contracts, where energies, right, here we go. Natural gas minus 92,990. So when we look at sort of hedge fund positioning, they've been kind of going a bit back and forth, to be honest. We started to see them buy, so it went from minus 94 up to minus 73. They're now starting to sell again. So I do feel like we're going to see a little bit more downside. And let's have a look. Let's open this up. So we're not really at any kind of extreme, but what we are seeing is commercials are buying, hedge funds are selling. Okay, so you know that tells us that there's potential for this price to push a little bit lower here. Not really. I mean, they were at an extreme long kind of here, right? So you had commercials extremely short, hedge funds extremely long, and that kind of created this little bit of a bullish push there, which is quite interesting to see, because I think if commercials were so short there, I would have been looking for a little bit of a sort of rollover in that price. Trying to look at where we were similar. So we were similar here. No, yeah, that's right. Commercial short, hedge funds extreme long. You look for the reversal situation. I had that kind of push there. Starting to see that kind of give back a little bit. Maybe if we do actually, I might be wrong. Might be wrong there. Now that we're closing above this area, it might actually continue higher. I thought the contracts were a little bit higher than that. But might be wrong on that one. Because you want to be looking at sort of contracts that are up towards these kind of levels for hedge funds. Although again, those two extremes here. Just trying to eye up some extremes. So hedge funds fairly bullish here, start selling, market moves down, they get fairly bullish again, but the market ignores that, right? Because if hedge funds are extreme bullish, I would be looking to short that market, and that's not what happened. The market obviously went a lot higher. They then got extremely short. Price continued higher, so that's what I'd be looking at if I was going to buy. Right, but get rid of all this. If I wanted to be a buyer of nat gas, I'd want to see hedge funds extremely short. So I'd be looking at that level down in here, right, where we had them extreme short looking back over a good period of time. So that would be me being a buyer of nat gas. Okay. Hedge funds have now reached, or they were at an extreme long. So yeah, naturally I would want to have shorted here, but price has just continued to push higher. So I have to wait and see then. If we do start to see this roll over, I would expect price to kind of drop with it. I think a big key factor for nat gas could be the situation between Russia and Ukraine, right? If we do see them come up with some kind of deal and the war does end and some ceasefire happens and whatnot, nat gas prices might actually move lower a little bit, right? So something to kind of keep an eye on. Hello, DJ. Hope you are well. I was thinking of short, but inventories were a bit lower than expected, meaning it will take more to fill stores. Expectation is short term lower before price rises. Yeah. Okay. I haven't kept up with the inventories on natural gas, to be honest. So I haven't peeked into any kind of data on that. So I'll have to go take a look. Let's look at crude oil. Crude oil was kind of getting interesting for me. Let's have a look. So hedge funds have reached a short very similar to those that were here and here. And the last time we were at these points, we've seen a rise in price. Commercials also were long at that point. Okay, and we're reaching those similar levels again. So this is kind of a slight extreme here, and that makes sense as well because we're kind of at these significant lows. So the only problem we've got with oil prices is the fact that OPEC has agreed to increase production, and usually when we see an increase in production, we see oil prices fall. That and the fact that Donald Trump is trying to get lower oil prices as well, to try and lower overall inflation figures in the US, is kind of driving the narrative that we might see lower oil prices. But we are coming into a bit of an extreme here. So what does that mean? Does that mean I go out and I go buy oil? No, right? We still have to put in a process, okay? Just because the reports say hedge funds are at an extreme doesn't necessarily mean anything, right? We just looked at that with natural gas, right? Hedge funds were at extreme longs, which means I would be looking for the fade. Prices kept rising. All it means is, for me, that we should start becoming a little bit more cautious on selling it, right? Because they're reaching that extreme level. So for me, when I look at oil prices now and I go, okay, well, we're seeing that we've got a potential long opportunity. I go, okay, well, what else is going on? Why are hedge funds selling this so aggressively? Well, probably because of the situation I just talked about with regards to OPEC and whatnot. We are at a significant level. So do I want to short this market myself? No, because where's the reward to risk here? It's not there. Unless you're trying to trade this on a lower time frame, like 30-minute, 15-minute, and you're trying to just short from significant highs, right? Then that makes sense. Look, I was shorting it in here last week, very unsuccessfully. I think I took 2 losses on oil last week because I was trying to short this bottom area because I was fairly certain that we'd break through this $65 barrier, and we didn't. So, for me, it becomes about, keeping risk low at that point, and I did keep risk low. I think I only lost like 0.2% on that move. But, let's see what happens here with oil. I do think oil prices will be weaker, but if we do start to see something like, a consolidation build up here and then a breakout of $68, then the narrative changes at that point, and we'll probably see prices push a little bit higher. So that's something to consider as well. If we continue the trend, then fantastic. We've got downside targets of like $60, but at the moment, I don't really want to be putting risk on here because we can see how choppy the market has now become. Right? When I was selling it, I was trying to sell here. I think I tried to sell here as well because we started to get that continual kind of trend movement. But then I got stopped out on that one, and pretty sure I took a small loss on this one as well. I think I took profits, but on a small loss. So yeah, I mean, look, market has just pretty much gone sideways. So I'm gonna wait now on oil, see if we can get that breakout either to the downside, or will the commitment to trader signal play out? Will we see that breakout to the upside? We have to see if the fundamental narrative shifts, I believe. Yeah, good point. Just leave it for a little bit. Can you tell me where the best areas to buy silver? I'm looking at that myself. So long silver was probably, was my best trade last week. We talked about being long targets of $34. We've hit those $34 targets now. I came out on Friday because we were very close anyway to $34. So I ended up taking it around about 97s, I think it was, in the end, because we were just so close. But we were on the live stream around this area here, and I was talking about the long at this point. And it just took off. Market just kind of took off, which was great. Now we're kind of at that $34 level. I think, we need to see a pullback, don't we? I would like to see a pullback because I do still believe silver has a lot more upside, especially when it comes to kind of looking at value against gold. So 2 areas for me, I think, if we can try and get some kind of pullback into $33, maybe a bit lower. I kind of like this trend line that's going through here. I'm not a huge fan of using trend lines as actual support and resistance. I prefer to use them as kind of like breakout points. But, we can see that anchored from the low here, start of 2025, using the formation of that low, stretched out. We've had one test here. So anchor, formation, first test. Are we going to get a second test back towards this kind of $32.50 handle, somewhere around there? So in and around this kind of point would be nice. Whether we get there or not, I don't know. This is quite a big level of resistance. So, I expect some take profits from here. I can see we've obviously had a decent rally up as well. Let me change my fib back. That's not what I want. See what that looks like. Okay, so if we look at fibs just from the, I know everybody likes looking at fibs really. We can see that this leg here to that leg there, which is actually a weekly move. But I mean, we could argue the weekly move starts down from here to here. So we kind of hit the sort of zone of interest, wasn't it, between the 38.2 and the 61.8. That zone in there to be a bit of a buyer, kind of hit the 50% fib retracement and continued to rise up. So you got the 127 extension, which is usually a bit of a target point for fib traders, up just beyond that $34.50 area. So that could be an area where we see prices come in. And then it's about, okay, well, if that's the case, where could price kind of retrace back to? Now, I do like using fibs. One of my first ever trading strategies was Fibonacci. And I would basically just buy 38.2 or buy the 61.8. It was actually quite a profitable strategy. Just the drawdowns could be quite big. But that area there looks good, right? When you kind of, if we mapped it out and said it stopped at the 127 extension, you know, that zone in here towards that kind of $33 and just below looks pretty good to me. So I would be keeping an eye on that. I think we could probably see a little bit more upside in the near term, but at the same time, I do want to see a bit more of a pullback on this market. You know, when I look at that daily chart in particular, it's in a very strong sort of upward trend. You know, you got these nice kind of higher high, higher low patterns. So we may actually see something where we get a bit of a pullback, continuation up into this $34.50 zone, and then a deeper correction. Maybe something like that will happen instead. But I don't want to buy here. I don't want to buy here at all, because let's face it, you know, that to me is an area of resistance. I don't buy highs, I sell highs. So I think even from an intraday perspective, I'd find it very tough to buy there. Let's have a look at gold then, because gold is obviously continuing to push higher. Again, where does the train end for gold? There's just no way of kind of telling. Maybe the 161. Maybe now the next goal is the 3100 level. You know, that'll be the next call by every analyst. 3100. And if gold does continue to drive, we know the correlation is like 92%. So I think the problem I have with gold is I feel like everybody's trying to buy gold right now. And I think silver is still lagging behind. If we look at silver from that monthly play, we've still got these areas to go and target. And that's where I'm interested in getting towards on silver. So for me, I like the idea of being a buyer. That being said as well, I also like the correlation between silver and platinum. Very strong correlation there. And we can see that platinum prices have been rising considerably as well. So I think if you're trying to find value across the board, you know, you can look across your correlations and try and find something. I mean, platinum looks good. I think if we get a pullback on that, I'd be happy to be long platinum. But I would more like to buy silver. You know, looking at the gold silver ratio, still high up at these 90s. You know, that to me is a strong indication that silver needs to catch up with gold prices. And if we break beyond that, if we get to 95 or even anywhere near 100, you know, I want to be buying silver quite aggressively at that point. Because I think that's where we'll see a real turn from investors trying to buy gold to buy silver at those points. But if we can kind of stay up at this level of resistance on the gold silver ratio, then that usually leads to quite a significant rise in silver prices. So I'll be definitely keeping one eye open on the gold silver ratio. Are you from Manchester? No, I'm from Birmingham, United Kingdom. So not far away from Manchester, about an hour and a half away from Manchester, really, isn't it? So it's not too far away. I try and conceal my Brummie accent. I don't know whether I do a good job at that at all, but I do try and conceal it as best as I can. I think it was voted the worst accent, I believe, in the UK, the Brummie accent. So don't like to, go on about me being a Brummie, although I do love the Villa. So how could I miss it? Yeah. Now I've said it, you're probably like, oh yeah, I can tell. I feel like I do say some Birmingham twang to some words that I say. But yeah, I try and get out of it as much as possible. Now that the stock market is open, I just wanted to take a look at what the volatility index was doing, because we're still above that 20 level. Very significant milestone in the market here. We've been driving higher. Volatility has been driving higher for a while now. We've started to see a real nice kind of push back on this. I don't really want to buy the US stock markets without the VIX being below 20, right? And just to kind of show you why that is, and you probably heard me talk about this a lot anyway. But if we go take a look at the S&P 500 today, that's down. If we go and look at the NASDAQ, 1.56% down today, which was a nice little move down from this morning. But if we go just to the VIX on you can keep on the 1 hour chart. I'm just going to go to the daily chart, and I'm going to go to S&P 500, and we're just going to whack that on to compare, hit that right tool, pin it to the new scale. I just want to make these regular again. You can see how these two, correlate. It's just basically the VIX is the fear index. It's what investors, are they fearful in the market? We actually had, believe it or not, an extreme short position from hedge funds here, and look what happened to the volatility index. So I think if you're trying to look at COT reports for stock markets, don't think they're that good, because stock markets tend to just rally anyway. You're better off looking at the volatility index futures and looking at the reports from there. So you can see, obviously, we had that nice sort of rise in volatility. Stocks have fallen. I think if we stay, like I said, if we get below 20, usually below 20 are really good conditions to see stock market rallies, right? This is when we got below 20 here. We had a good stock market rally. If we don't get below that, I'm very cautious on buying the US stock market at the moment. That being said, I was looking at a few stocks. Let's have a look at the stock markets. One of them was General Dynamics. Now, General Dynamics are a company. I don't want to butcher this because I'm not a huge indice trader, but I'm starting to dabble. General Dynamics. Right, okay, yeah. So General Dynamics are a corporation in America, and they are aerospace and defense. That's why I quite liked them. So they're a defense contractor, but they have just won some contracts for icebreakers, as we are starting to see this big push for kind of the United States. You'll hear Donald Trump talk about it a lot. He's talking about kind of taking Greenland. The thing is, then, to explore those kind of areas, they need to create new technology in terms of new icebreakers. General Dynamics have won a contract to do that, and you can see that has seen stock prices rise here. I think from the lows, we're up quite a considerable way. It was up 15% at one point, up 11% from the lows. Quite like this stock. It kind of touched that 50 moving average, went higher. Same with Huntington as well. They also won contracts to create these icebreakers, so they're moving higher. Walmart is quite interesting. We've come back into the 50-day moving average here on Walmart. I believe this is the 50 moving average anyway. It should be. Oh no, it's the 200 daily average. Sorry. I did think that was a way away from price. Where's my 50 moving average? Oh, I've got it on hidden for some reason. So actually, you know, Walmart back down at the 200-day moving average isn't a bad idea. Think about, you know, Walmart kind of came out with these sales or projections to basically say that sales will be down in the second, third quarter of 2025, I believe. We've seen a sort of drive down in price by that. That also then kind of created this panic that we're going to see sort of a recession fears in the US grow. But usually in a recession, companies like Walmart tend to do pretty well. So this being down at the moment, I thought was like a bit counterintuitive to the market. I thought that the market would be sort of buying sort of Walmart. If we go take a look at sort of previous moves, yes, we have seen the market kind of crash a few times, you know, back in 2015, for instance. But I would have thought that we'd see a little bit more upside to this market. So just something to keep an eye on. I don't know what other markets I was looking at as well. I think this one had a 100% seasonal pattern, so I was looking to trade that. But yeah, I'm not a huge stock trader, but I thought I'd just kind of highlight those there. What's your take on Aussie US dollar from Vincent? Let's go and have a little look then. So Aussie US dollar at the moment is down a little bit on the day, down sort of 54 basis points on the day. Kind of came into that 6,400 level, didn't we? Up into these weekly highs as well. So that's quite interesting. Let me just take off these EMAs. Nice weekly high there. So in general, kind of, you know, resistance and support kind of terms, you know, that to me is a significant high. We've come up into that area, we're rejecting it. So there could be some potential downside. It's going to all depend on what happens in China, really. If China do start to see some kind of internal stimulus, or to the point of where we see kind of internal economics get a little bit better in China, then I think the Australia or the wider market, then, you know, close trading partners, Australia, New Zealand will probably start to do a little bit better. I think Aussie is the only one hedge funds are still pretty much selling right now. If we take a look at the situation here, yeah, so we went from, I mean, slight change in contracts last week, but from the week prior, you know, we were at minus 45, we're now down into the minus 48. Although, that being said, just looking at the previous contracts, we were minus 75k, we're now minus 48. So technically, hedge funds are actually reducing those short positions. So commercials are selling, hedge funds are buying here. Not really at any sort of extreme. This was the extreme where we saw hedge funds selling. This is where we were interested in being a bit of a buyer in Aussie. We're starting to see a push higher now. I don't see a lot going on in the Australian dollar, to be honest, when it comes to the COT reports anyway. Yeah, I've been saying this for quite a while. I think this is kind of like a make or break year for the Australian dollar, because I think if China opens up again and does pretty well, then I think Aussie US dollar would be a lot higher. The problem is if China remains pretty poor, and if the trade tariff situation between the US and China gets worse, then I don't think that the Australian dollar is going to have a good time. I mean, from a trading point of view, it's not a bad area to get short, is it? I mean, look at that nice little double top there, break of that low. I don't think it's a bad idea to get short around these areas. I'm just very unwilling to buy US dollar right now. Although it's kind of cheap in the grand scheme of things, I don't think I want to be a buyer there, which makes me not want to to sell Aussie US dollar here. I mean, naturally, what you used to have was quite positive flows from Aussie US dollar and gold. Not really seen that lately for obvious reasons. But I mean, look at Aussie Swiss, that's still down. Looking at the current, I haven't actually shown the currency strength meter, have I? Oh my God, I went 52 minutes without talking about the currency strength meter. I need a pat on the back. Right. So Aussie's still technically short for me on here, -4. Did I update this week? Did I update this? I don't think I did. Don't think I did. Right, let me just do this quickly. So 7.5 -4, 7.5 -4. I think it's because there were no changes, was there? Yeah, there's literally 0 changes. So -1, -2, -5, 3, and 7. Okay. I still want to try and get this to be interactive. I don't know how to do that yet. I need to hire a sort of designer, get this on its own landing page. But yeah, so Japanese yen still a very strong currency. If we look at the Australian dollar, which is the grey line, it's still down at these kind of -4 levels. When I look at the Canadian dollar, that's in the reversal zone at -5. So if we do see an uptick in CAD next week, there could be some opportunities to buy CAD. At the moment, I still feel like Aussie is a weaker currency, especially against the Swiss franc, the pound, the euro, and the Japanese yen. So I think if you're going to look at short in Aussie, maybe those are the places we go and do it at. I mean, Aussie Swiss starting to push higher. We did talk about Aussie Swiss last week, and we were talking about if it can break this low and make a new low on the 4-hour time frame. It didn't do it, so I didn't take a short on this market. That being said, if we look at the sort of what's going on now, we are starting to see that sort of shift up here, aren't we? You know, over here we had higher high, higher low, higher high. The market did not create a new low on the hourly chart, just stuck at that low. We created one with a wick, but I look for a close below. We didn't get it. Here though, right, we had that. The market came in, kind of consolidated. What is consolidation? It's volume. Okay, we broke out of that volume, came in, wicked it, closed below. Market pushes down at an interesting point now. So I think if you're going to sell Aussie, I think against the Swiss franc still looks pretty good. We're now back below that 5,600 handle, so maybe a break of that could be an opportunity. What you could do is just watch this 4-hour time frame now, and if you see the 4-hour time frames kind of slowly pulling back higher, I'd be looking at sort of my 30-minute breaking trend at that point. And if the 30-minute broke the trend, then I'd be looking to action the short on there. Aussie CAD, was it? I can't remember what was on there now. Was it Aussie CAD? No, it was pound Aussie, euro Aussie, and euro yen. I do really like euro Aus long. Oh, we're starting to get a breakout here now. I was very tempted to get long here earlier, and I didn't do it. But now we're starting to create a potential breakout here. I really like euro Aussie long. I've been watching this daily chart, and I'm looking at this kind of daily pullback here. Again, look at your 4-hour chart. What have you got? You've got these lower highs, these preceding lower highs. So high, low, lower, high, right? And then that's our new lower low. Okay, so I would like to see some kind of, again, let it go, because this is good. It's telling us that buyers are getting in here. If it starts to pull back, that's where I'm going to get interested. Okay, I'm going to take a look at my 30-minute chart. I'm going to look at the the downward trend on the 30-minute chart, if that breaks, then I want to start looking at buying Euro Aussie, potentially back up into, whoops, that's not a good line, back up into this kind of area here, right? This kind of 174s, in and around that area there. So I do quite like that long setup. When does that candle close? That will close at 6 p.m, right? Or 5 p.m. What are we on here? Time zone, yeah, 14:56. So yeah, I believe this one will close then, because that closed at 9. So this will close at 5 p.m. So if we do get a close here, then that might be an early entry for me. Let me just map ATR. ATR is quite high here, so that might tell you to kind of lower your risk a little bit. 125 pips. Where does that put us? So let's say I enter there. Where does 125 pips put me? Profit target would be 174. Okay, so that does kind of put me below that swing low there. So yeah, I'll keep an eye on that then. So that's 125 pips away. So I'm just going to pop that text. Okay, I'm going to keep an eye on that then. Because essentially what I'm going to try and look for, that's where, so this is how I'd kind of work out. This is where my full 1% risk would be if I was going to go with 1%, right? This ATR low. But let's say price starts to push even higher. Let's say it gets to this level here. And then the 4 hour goes into a secondary phase. We see sort of like lower lows, lower highs. I'll be looking at some kind of breakout there. And what I might be able to do at that point is just bring my stop loss from here to here, lowering the risk essentially. So, you know, that looks to be about half. So I'll probably be trading at 0.5% there. Because if it breaks back below that at that point, then I probably don't want to be in it anyway. So I'll see around that. But we can then kind of trade higher. That'd be nice. So I do quite like Euro Aussie. If we have a little look at what's going on, so there's one thing that you can try and do, right? That can help you kind of map the market. This is what I do a lot. If we go to EU, no, hang on, wait, I need to click compare first. Compare EU O2Y minus the US O2, no, not the US. I'm not used to zero, that's why. EU O2Y minus the spread. Let's see if this works. Yes, right. Move to new right scale. So essentially this is the EU 2-year bond yields minus the Australian 2-year bond yields, right? And what we kind of look for is when these bond yields drive lower, or, you know, when they create a high and they create a bottom in the market, you usually see the flows going into the currency then, right? So when the bond yields made a low here and it broke the high, right? You can see Euro Aussie also sort of traded higher at that point. Again, when we started to kind of break higher, Euro Aussie was also breaking higher, pushing those moves to the upside. So I quite like to look at the differentials between the bond yields to see if it gives us any kind of advantage. Usually bond yields will go first, not always, but usually the bond yields will go first, and then we look at something. So for instance, this is like a real kind of differential here, right? At a huge spike in Europe and the Australian against the Australian dollar. But bond yields didn't really push that high. In fact, bond yields started to really break lower, which then followed that big move. A lot of people probably tried to buy that move there. So we'll see if that can continue higher. I want to see a pullback on that though. I like the 4 hour breaking out. But if the 4 hour can come back down, go again, that would be nice to see. You're long. Sorry, Vincent, I missed that. You're long. Sorry, Rai Guy. Did I say hello? I can't believe. I don't remember if I said hello. Hi, Rai Guy. If I missed you, I'm sorry. Euro Oz 171.397. I like the way you trade, Vincent, because you get in at very good prices. Yeah, I don't mind that. I like that. Nice little kind of pin candle there, maybe. You know, I like that. Don't mind that at all. Stop loss, as long as stop losses are below these lows, I think that's a good trade. Oh, on the 15-minute, yeah. So it would have been that little kind of pin candle in there, I guess, or at least that breakout of that high, I'm guessing. I don't know if you've covered it already, but I'm looking at pound yen, long on pound yen, which was pulling back. Yeah, I actually got short pound this morning on a very low trade, low risk trade. I was trading with the guys at Trade Delicious this morning, and I was talking about the potential double top here at the 1.3 handle, and that actually followed through pretty nicely in the end. Market just continued to sort of sink lower. I do quite like cable long, but again, it's kind of like value. Where's the good value trade at the moment? Probably down towards 128 is more of where I'm interested in pound. Looking at pound yen, yeah, very similar kind of feelings. You know, that's quite a high price, I would say. I want to try and see if it will kind of push lower, potentially, maybe back down towards the 192s. We'll see if this yen weakness remains. That's the key, right? And I think again, it's going to come down to a multiple factor of things. One of those factors being the situation in the US stock market, because what we don't want to see, if we want to be short Japanese yen, we don't really want to see volatility rise. Okay, we want to see volatility break that 20 barrier. We want to see that continue down, because that means the market's turning more risk on, and that's when we'll see weakness in safe haven currencies like the Japanese yen. Where's pound yen now? Okay, there we go. So I think we've got to be a little bit careful on these yens. I mean, I'd like it personally because I'm buying Kiwi yen, but you know, it doesn't mean that the market is going to continue to trade higher. We're at this resistance point here, sort of that 194 level, 194.50. Could easily see this come back to 192s easily. This week, is it a good idea to long Euro Oz? Yeah, I think so. Personally, I still like that move. You know, again, I think it's going to come down to what risk is doing. I think Euro is just a super strong currency anyway. And there is a news report out today. I don't know whether it's been updated yet, but we go here. Germany are set to vote on historic increase in defense spending. So if we see a sort of continuation of that, so where does it say about the here we go. Defense spending in Germany rose by 23% last year, helping to drive a 11.7 rise in European defense outlay. And then we've got, basically, this is where they are going to give out. There was something in here, I believe, or it might have been a different one. Here, okay. On March 4, European Commission announced plans for an 800 billion defense fund, right? So that is really significant. And I think the likelihood is that we are going to see that passed. I haven't heard or seen any news on it. Let's just have a little look. Let's see if Forex Live have reported anything on that. Oh, here we go. The Bundestag vote is underway and it passes. What a good timing was that? What a good timing was that? Okay, the Bundestag is currently voting on Chancellor Merkel's fiscal reform with results. Well, it's passed. I mean, was it not going to get passed? Let's be real. The reformed debt policies would allow higher defence spending and create a 500 billion euro infrastructure and climate fund. The proposal, backed by the CDU, CSU, and SPD, seeks to exempt defence and infrastructure-related loans from the debt brake, while also granting more flexibility to Germany's states. So that is a significant move, and I think this will keep euro fairly bullish. Okay, that was reported around 3 p.m. So let's see. Let me just have a quick look at Euro Aussie. So at kind of 2-3 p.m. time, we saw that breakout happen. So yeah, I think the market is kind of favouring this at the moment. I don't know if there's anything else on here about that. I like looking at Forex Live. They kind of give you some nice little quick updates to what's going on in the market. I usually check this in the mornings and in the US session as well, just to kind of keep us updated. Just going to talk about CAD CPI, I guess. Yeah. Okay. The call apparently happening between Russia and the US today. Okay, so there we have it. So I still like euro against the Australian dollar, and I still like Kiwi as well. Did you catch? Yeah, I caught it in the end. I took a loss on it first, right, guy, and then I took it again. So I ended up. This is my current position. This is open right now. I ended up buying here. Stop loss below those lows, and I took a loss initially on this move, and then I entered it again, essentially early sort of Friday. Well, actually hung around a little bit and ended up taking a long buy stop order above those highs. Problem with trading the Japanese yen or Kiwi in general is it's very hard to take a position on it overnight. Or one thing that did happen to me was I took a small short dollar yen as well in here. Where was it? Here. That was actually last Thursday, wasn't it? It was a 15-minute short. And this is why I don't trade these time frames a lot anymore. I think on Thursday, yeah, it was here. I think we were on stream on Thursday, and I took a short here. Might have been even a lower time frame than that. Might have been a 5-minute in the end. Might have been that break there. I can't remember. I haven't got my trading terminal open right now. But that head and shoulders, I think, was the reason I got short. I'll have to go look back on the stream because we took that short. This started to play out really nicely, and we broke these swing lows in here, and I was really happy with it. And I was like, oh, okay, quite like this. So I ended up basically bringing my stop loss all the way down here, and then the market just really reversed. And then overnight, it just shot back to the upside, which triggered my New Zealand yen in. So this was the overnight move. But at the same time, I was quite, surprised by the move because we kind of took that low out. So, but yeah, I did take a secondary position on Kiwi yen. It was only a small position. But at the same time, it's kind of playing out okay right now. This resistance level here, 87s, is starting to bug me a little bit, I must admit, seeing that rejection here right now. But I'll wait to see what happens. I'm going to watch this 4-hour chart. I think if we get a nice little push back up, we're going to see if we get back up into that high and we fail, let's say we get like a close below on the 4-hour time frame, I'll move my stop loss up towards a low, wherever that low may be. I don't know where that's going to be. And I'll take some more off of this move. I've already took a little bit off of it, and I'll take another chunk off of it whenever that happens. Let's have a look at Swiss yen, because I know that broke out recently to the upside, and I still quite like Swiss yen downside in the sort of medium to long term. You know, and this has been a very profitable market for me this year. I've shorted this market about 4 or 5 times across this downward trend. That was the last time I shorted it. Ended up coming out with a break-even trade here, so close to my TP. It went back down again, moved my stop loss to break-even, got stopped out for break-even. But at the same time, look at this nice little break that's happening here. I'm going to be keeping an eye on this. You know, when I look at the weekly time frame, nice break of this area, getting that kind of pullback now. See if we can get a change of trend on the daily chart, and then that would be me looking for further downside here. I think the Swiss National Bank, if they cut rates tomorrow, I'll be interested to see what they say in terms of, sorry, on Thursday, in terms of their kind of future forecasts. But I still favour this market to the downside from a fundamental perspective. What do you do when you're in a position? Do you manage the position alone, or do you look for another trade? Again, Vincent, really depends. Really depends. You know, it depends on the size that I've taken in the first place. A lot of the times, you know, if I feel that the trend is going to be a good one, obviously I don't know what's going to happen next. But if I feel like, let's say I've got into, so like Swiss yen, I shorted 4 times, right? I closed my original position before I took a secondary position in those trades because I had quite a significant size on that. But at the same time, yeah, let's say I went in at like 0.25% on the initial trade, you know, I would add in on those potential breaks, you know, at these kind of points, but I'd only do it in kind of the same increments. If I go in at like 0.5 and higher, then I'll look to close the position out before entering in a new trade. I think especially this year, with the way markets have been, I don't think I've actually held that many trades over a weekend so far this year. I try and get flat on the weekend because I don't know what's going to happen over the weekend. The next thing you know, the markets are going to jump, and I don't want to be a part of that. So managing trades, it really depends on the market. It really depends on the trend of that market. If we've got a beautifully flowing trend like this, and let's say I got in and right at the highs, I'll just kind of manage my stop loss down, you know, and if it keeps going, just keep dragging my stop. And then if it takes me out, it takes me out, right? But I want to try and get as much out of it as physically possible if I can. But you know what it's like. Sometimes you see your P&L floating and it's up a decent size and you're like, I'm happy with that, you know. And like I said, I try and get flat on the end of the week if I can. If there's something that I've opened on, you know, like New Zealand yen, if I've opened that on a Friday, then there's no real point of getting flat for the weekend. I just want to see what gold and silver are doing. Silver's still trying to pull back. I like that move in there. Cheers, Rygo. Yeah. Right, okay. We've been talking for an hour and 15. I haven't got a drink, so my throat is starting to get a little scratchy. So I'm going to leave it there, guys. I think for me, just to kind of keep an open mind. It's a very high impact news week in general. We've got 4 central bank announcements. Usually in these type of market conditions, the first thing I would say to you is it's a heavy news week. We usually see the markets go risk off. So, you know, maybe we will see some strength to the US dollar going into this trading week. So just keep an eye on that. Be mindful of that. Remember, don't rush into anything. Let the markets breathe. Let the markets do what they're going to do. Just look for those high probability setups. At the moment, I'm not seeing a ton, personally. I'm not seeing a ton. You know, Kiwi yen I like, but again, that could change if we see the market flip back to risk off. That could change quite quickly. So I'll keep an eye on what's going on the sort of dollar yen side of things at that point. Aussie I quite like to the downside. We're now starting to see Aussie Swiss. So just to kind of summarize, maybe if Aussie Swiss breaks, I'll be interested in that, and I am interested in Euro Oz. But I think if we look at, let me just look at the correlation, because Aussie Swiss and Euro Oz should have a very strong correlation in the market. So let me just have a quick look. I don't know what the correlation rate will be, but I'm pretty sure we would be fairly high on that one. So where is Aussie Swiss? So yeah, that has an 88.5% negative correlation. So basically that means that when Aussie Swiss moves higher, Euro Oz moves lower, which makes sense, but it's an 88.5% correlation. So I think if I trade Euro Aussie, I will not trade Aussie Swiss. It's got to be one or the other because they're too correlated together. Okay, so thank you for everybody for joining. Really appreciate you all. Hope you have a great rest of your trading day. I'll be back on Thursday and I'll chat to you all then. Thanks for the questions as usual. If you could leave the channel or the stream, a like or a thumbs up, I'd appreciate that. And if you're not subscribed, hit that subscribe button. And I will see you Thursday. Cheers, guys.